today was impressive to say the least. Uh, all of our models, they've all switched to an operational buy condition, which means I am looking to press it on the long side with new signals. I thought I got a really good long signal in a former long position that we had that we left with a gain on. That's a perfect speculator scan stock and a canceling stock, but sadly earnings are in the morning, so that's knocked out. And then another canceling perfect speculator stock earnings come out tomorrow, so we lost a couple of those. But let's just focus on the market right now. The NASDAQ, another strong day, up 1.30%. And more importantly, we've broken out to new short-term highs while holding those gap up lows of 499.99.54. So overall, very, very, very impressive move. The volume was above average today. And as you can see with the oscillators, they're going into new high ground. Same with the stochastics. So while they look overbought and you're like, oh, we got to pull back, remember when oscillators are already kind of overbought and then you continue to move higher, chances are they're going to stay overbought for a while. And then when we go to a weekly, look at MACD on a weekly. That has a long way to turn up and go before it gets overbought on a weekly. And the same thing can be said for the stochastics. Look at the stochastics. It's right around the lows. Want to go farther back out, though, just to see that it's not like it's at ultimate lows. But look at the relative strength index line on a weekly basis. It still has a long way to go to get overbought. So overall, that looks good. And then sticking on this chart, let's move over to the S&P 500. Same similar situation. You can see we're just starting to move off oversold levels in this index, and the S&P 500 looks good. Getting back to this chart here, pocket pivot point signal above or bounce off its 200-day moving average. Oscillators are in overbought territory, which is actually short-term bullish because the weekly oscillators are just now coming from oversold. But the most important move on the day was the Russell 2000, up almost a full 3%. A huge, huge follow-through session. Left no doubt about it that the Russell 2000 now is 100% ready to join the rally. Remember, my biggest problem, and it's funny how just one day can change everything in this market. Yesterday, I went from being neutral to moderately bullish to thinking, oh shit, I could see how we could easily reverse this because I had a lot of long positions, high quality long positions, not have very good sessions when the market didn't have that bad of a session. Thought it was showing some internal relative strength weakness. But today, boom, immediate change of character. If you're one of those guys that like to marry your opinions, and let's say I'm going to be smart and I'm going to call a top yesterday, game one of the World Series, game one of a top in this market, and I'm not moving or budging off that opinion, well, I'd be screwed because today the market is telling you, hey, that little idea that you had there yesterday whenever we retook out the 50-day moving average on the Russell 2000 was proven 100% wrong today, as we not only closed strong but went out near the high of the day, closed above those October resistance levels, and just retook the 50-day moving average very powerfully. And once again, short-term oscillators are starting to get overbought. RSI nowhere near. But look at a weekly. This is beautiful. MACD just now starting to curl up from oversold. Looking at stochastics, just now starting to curl up from oversold. And as you can see, they got to pretty oversold, areas that we saw even back in 2011 and 2009. So there is a potential for a very, very nice end of the year rally now. It looks really, really good. But, it's still not smooth out there. One of my issues yesterday, obviously, was that Twitter was gapping down. Well, of course, this morning it blew through my stops. Not by much. I think my final stop was like, 28.31? No, 28.37. And it opened at 28.13. So I didn't miss it by much. But it reversed, and it closed near the high of the day. Big reversal. So that's a positive because that was my only sell stop that triggered intraday that was a stock. Now, that being said, technically yesterday, I forgot to really post it. BIS was a full sell yesterday, but because of lower volume and it's still being above this support level right here, and especially this one, I was going to give it time. However, I did move my final sell stop to below the low of day, 31.94. But today is a confirmation close below the 50 and 200-day moving average. BIS is now a 100% full sell on the end-of-day basis. Move below 31.08. You need to be out. And SRTY, my final sell stop before today was right here at 27.20. And I'm still going to probably keep it at 27.20 for one reason. Technically, this is a full sell. It's breaking below the 200-day moving average after failing to get back above the 50-day moving average on heavier volume. Done. SRT-wise done. Final sell stop hits 27.26. I'm out. But because this support level is so close, and because this market's still so whippy, and it's possible that this could be a fake out breakout, I have a completely open mind to anything and everything regarding the stock market. I will never, ever have a biased opinion that's set in stone. It could reverse. I'll go ahead and use 27.20. So if it hits 27.19, I'll be knocked out. But technically, on an end-of-day basis today, SRTY is a full sell. And then VRSK, I actually got lucky on this one, which at first I was kind of pissed. After this day, I made 78.88 my final sell stop. It went below 78.88, hitting 78.71. And of course, it was consolidating the entire way with solid green bop. So I was kind of upset that VRSK on earnings was going to break out, and it looked like it was starting to break out a couple days before earnings. But today, no go. Big failure. Gap down, which would have gotten me out of the full position, let's say, after this day and this day up, no matter what. 78.51 would have been my final sell stop. So when open at 77, we're completely out of it, and we don't have to wait to 72. But if we're working on an end-of-day basis, yes, this one hurt a lot because it's now a full sell, which is once again why I prefer sell stops, because the few times that they lose this much, I hate losing money. I just hate losing money. So I never would allow this to ever happen unless it gapped down to 72.66. And there's nothing you can do. What are you going to do? Nothing you can do. It's just part of the game. Shit's going to happen in a volatile, choppy market. I mean, there's just no point in crying over spilled milk. So now getting to the new long positions. Now that we go VRSK, BIS, S2N. Oh, yeah, technically APDN is a 50% sell with it closing below 20-day moving average. I would use the 666 low a day as your final sell stop level. So our first new long for the evening is USCR. USCR is a CanSlim name, and it's a perfect speculator scan name. 2% for CanSlim. Now it's 2% for the perfect speculator scan since my models have switched to buy. No, it's not 2.5 because we're not out of the wood yet. Earnings are coming up. This is actually quite a large position for me ahead of earnings. This is a pretty solid stock chart. I really don't see this materials and construction stock disappointing. I really don't. So far, I've done very well with guessing which earnings would work. For instance, going long FSB before earnings, NHTC before earnings, and I'm going to keep this up and hope that my track record continues. But USCR, 2%, even though earnings are on the 3rd, I believe. But I just don't see, based on what I see in the housing market, that this one disappointing. So USCR, 4%, CanSlim, perfect speculator. And then there's an ad signal in what would have been a 50% sell yesterday on an end-of-day basis. So maybe you got out of all of it. So you're going to need to add back that position, which would be, I think, remaining for me would have been like 0.5%, and it's a 2% ad signal. So we got a pocket pivot point signal on strong volume. Earnings are on the 5th or something like that. I totally forgot. I wrote it down somewhere, but I can't see where I wrote it down. So we got a few days, but Coke bouncing off that 20-day moving average with a pocket pivot point signal, heavy volume. It's CanSlim quality name. It's a perfect speculator scan quality name. So I got to go long 1% CanSlim, 1% for perfect speculator. So Coke 2%. And then that was it for high quality. Had to pass on ABMD. Love the signal. Love the signal. Earnings are in the morning. Can't take it. That would have been 2% CanSlim, 2% perfect speculator. And then CBM, this would have been 2% CanSlim and even 2% for being pre-perfect speculator. But on this one, it would have been, half of it would have been sold if it went below 44.09 in the final half at 39.45. But CBM, no good. Earnings are in the morning. No good. Which then leaves us with only 3 more long positions, and 2 of them are ETFs. But before I get to that, let's go over the speculative long position. ONE, Higher One Holdings, bouncing off its 200-day moving average on a huge surge in volume. And I got something that I don't get too often, Max Green Bop on my Bop. So 1% for being an earnings winner back here, and 1% for being in my price volume Bop scan. So 1% earnings winner, 1% price volume Bop. Final cut loss below this low a day right here. And then also tonight, SMH ETF, Hack ETF. Hack was in my price volume Bop scan. That's going to get 2.5% for being ETF. If Hack would have been in my main ETF scan, it would be 5% like SMH. SMH is an ETF, pocket pivot point signal off the 200-day moving average. This is going to be a 5% position. We're under a buy signal across the board, everyone.